Hello, and welcome to Explain the Charts, your channel for detailed, no-nonsense technical and fundamental analysis. Today is November 18th, 2025, and we're taking a close look at semiconductor giant Intel Corporation, ticker Intel. The entire market is tense right now, with Wall Street showing significant volatility. Much of this anxiety is centered on the Federal Reserve's next move on interest rates and tomorrow's highly anticipated earnings report from Nvidia, which many see as a referendum on the so-called AI bubble. Against this backdrop, let's look at the news swirling around Intel. Fundamentally, Intel has been broadcasting a strong turnaround story, highlighted by a solid September quarter report showing a surge in profitability and its first revenue stabilization since 2022. Their strategic shift towards AI inference and edge computing, along with a key partnership with Cisco for its Xeon 6 CPUs, paints a bullish long-term picture. The Intel Foundry Services Initiative, positioning itself as a US-based alternative to TSMC, also adds to this positive narrative. We've seen some big players take notice, with SoftBank reportedly acquiring Intel shares while simultaneously exiting its Nvidia stake, a potentially significant strategic rotation. However, the sentiment is far from universally positive. Several tech CEOs have voiced concerns about a potential AI bubble, which could impact the entire sector. Analyst ratings reflect this division. While some price targets are rising, the consensus rating from MarketBeat remains a reduce, and a recent Seeking Alpha piece suggested the stock's incredible rally might be overextended. This creates a classic conflict for traders, a company with improving fundamentals versus a challenging macro environment and weakening short-term sentiment. Yesterday's price action reflected this negativity, with the stock closing down over 2% at $34.71. Now, let's pull up the daily chart to see how this complex narrative has translated into price action. Looking at the bigger picture, Intel has had a wild ride over the last year and a half. We saw a catastrophic gap down in early August 2024, which sent the stock tumbling from over $30. That event kicked off a brutal multi-month downtrend, with the stock eventually carving out a 52-week low at just $17.67 back in April of this year. That price level marked a significant capitulation and proved to be a major bottom. Since that April low, the stock has been in a powerful and clear uptrend, more than doubling in value. This incredible rally culminated in late October when the price hit a 52-week high of $42.48. However, this peak was sharply rejected, and the stock has been in a corrective phase since. We are currently trading about 18% below that recent high, a pullback that warrants close attention. Let's zoom in on the action since September to better understand this rally and the subsequent pullback. You can clearly see the explosive moves upward in late September, which coincided with the positive news about its Q3 performance and AI strategy. The stock gapped up and ran from the mid-$20s to over $42 in just over a month. Now, let's focus on the current correction from that $42.48 peak. The price has sliced through the psychologically important $40 level and failed to find support around the $38 mark. This brings us to a critical support zone, which I see between $33 and $34. This area represents the price consolidation that occurred in late September and early October right before the final leg of the rally began. This is the most crucial near-term level to watch. A decisive break and close below $33 on the daily chart would break the market structure of higher lows and could signal that a much deeper correction is underway. Switching over to the 1-hour chart gives us a clearer view of the recent bearish momentum. Since the peak at $42.48, the price has been forming a distinct pattern of lower highs and lower lows. This is the definition of a short-term downtrend. Notice the volume spikes on the sharp moves down, indicating aggressive selling pressure. Conversely, the bounces have been on lower volume, suggesting a lack of conviction from buyers. Immediate overhead resistance on this time frame is now located around the $35.75 to $36 area. This was the last point of consolidation before the most recent leg down. For any bullish reversal to take hold, Buyers will need to reclaim this $36 level with significant volume to break the current bearish structure. Finally, let's drill down to the 15-minute chart to analyze the price action from yesterday, November 17th. The session began with weakness and the selling pressure was fairly consistent throughout the day. The price established an intraday low at $34.23. We can see a few attempts to bounce during the afternoon, but each rally was feeble and quickly sold off, failing to make a higher high. The stock ultimately closed at $34.71, near the lower end of its daily range, which is a sign of weakness. This price action sets up a precarious situation for today's open. We will be watching closely to see if buyers decide to defend the yearly low of $34.23 or if sellers remain in control and push the price lower. So, to recap everything, let's put it all together. The key overhead resistance levels to watch are $36, followed by the $38 to $39 zone, and ultimately the 52-week high at $42.48. On the downside, the absolute critical support level is the $33 to $34 zone, with yesterday's low of $34.23 being the first line of defense. If that level breaks, we could see a rapid move down to the low $30s. Now for some potential scenarios. The bullish case hinges on the market interpreting Nvidia's earnings positively tomorrow, sparking a rally in the semiconductor sector. If Intel can hold the $34 support level through this period and subsequently reclaim $36, it would be a strong signal that the correction is over. Given the strong downward momentum, I'd place the probability of this happening in the short term at around 40%. The bearish case is that the macro fears continue to dominate or Nvidia's report disappoints the market. In this scenario, a break of support at $34 seems very likely. This would open the door for a retest of the $30 to $31 area. Considering the current chart structure and market sentiment, I believe a further downward test has a higher probability, around 60%, before a more sustainable bottom is found. The main thing to watch is the market's reaction to Nvidia's earnings on November 19th. Pay close attention to whether Intel can hold that $34 level on a daily closing basis. And finally, a short disclaimer. This analysis is for educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own research before making any decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.